Welcome, everyone. Today we are diving into a question that comes up again and again. Can a self-employed person have a solo 401k? So can a self-employed person have a solo 401k? The quick answer is yes, provided certain requirements are met. We're going to go over all these requirements today. But the real value is in understanding how to structure a solo 401k properly to maximize tax savings, build wealth faster, and keep your retirement flexible. So again, today's topic is, can a self-employed person have a solo 401k plan? Go ahead and type over questions you have during today's daily webinar. The questions can pertain to other topics surrounding retirement plans. It doesn't have to be specific to today's topic. As those questions come in, we'll pause and answer them. Please also like today's video. This helps us get the word out to other solopreneurs like yourself. Please also subscribe to our YouTube channel, where you can view our large video catalog, over 900 videos covering all aspects of retirement plans. Also, take a look at our My Community. It's free to join. If you're a financial professional, CPA, tax advisor, insurance agent, real estate agent, you can post guest blog posts on that community and link it back to your company's website to get more eyeballs on your services and as well as your website. Also, take a look at our artificial intelligence website, which is www.solo401k.ai. So www.solo401k.ai. Okay, I don't see any live questions at the moment. So let's get started with today's topic, which is, can a self-employed person have a solo 401k plan? The quick answer is yes, provided certain eligibility requirements are met. So we're going to discuss who qualifies for a solo 401k and who does not. We're going to talk about contributions, both employee, employer, as well as voluntary after-tax solo 401k contributions. We'll also talk about how a solo 401k beats the SIP IRA, as well as traditional IRAs. And then we'll talk about the mega backdoor Roth strategy and how a solo 401k can also invest in alternative investments like physical real estate, precious metals, cryptocurrency, trust deeds, promissory notes, as well as equities, of course. So, who qualifies for a solo 401k plan? Well, it's for someone who's self-employed. So it's for self-employed individuals who own their own business. And that business cannot employ any full-time W-2 employees, which is a W-2 employee who's not an owner, who works 1,000 hours or more in that business. If any of your businesses employ a full-time W-2 employee who's not an owner or is not your spouse, then you would not qualify to open a solo 401k. Now, both spouses may participate in the same solo 401k plan. That's known as the spousal exception, provided they both work in the same business. And that would be deemed a two-participant plan where you have both spouses participating in the same plan. So that would just be one plan with separate holding accounts. Here on the right is an example of a two-participant plan. Let's say you and your spouse are self-employed in the same LLC. So the LLC would sponsor the solo 401k plan. Both spouses would have separate holding accounts under that solo 401k to hold their contribution types, such as pre-tax solo 401k contributions, Roth solo 401k contributions, as well as voluntary after-tax solo 401k contributions. Hence why you see here a total of 6 holding accounts, aka bank or brokerage accounts, because the solo 401k requires the separate holding accounts for each spouse and separate buckets for each spouse. Okay. So from an eligibility perspective, And review, you have to be self-employed in your own business and not employ any full-time W-2 employees in any business that you control. If you do employ a full-time W-2 employee who's not an owner in the business and that individual works 1,000 hours or more, then you would not be able to open a solo 401k plan because a solo 401k plan is for the self-employed, provided that individual's business does not employ any non-owner full-time W-2 employees who work 1,000 hours or more. You can always exclude those who are under age 21. So even if you hire an employee that's under age 21 and he or she works 1,000 hours or more as a W-2 employee, you can still exclude that individual. You can also exclude union employees and independent contractors if your business hires any of those. So as long as you're eligible, the solo 401k plan really puts you in control because you'll be able to place investments in real estate, promissory notes, cryptocurrency, private equity, as well as alternative investments. There's other alternative investments, in addition to being able to invest in equities like stocks and exchange traded funds, for example. With the solo 401k, you can also make high annual contributions. We're going to go over that here in a little bit. You can also borrow from the solo 401k plan through a solo 401k participant loan, and you pay your own solo 401k back. So it's a very robust retirement account for the self-employed, provided, of course, that you're eligible for it. So some of the reasons for a solo 401k is that, again, you can invest in physical real estate, whether they're rental properties, it can be commercial, residential real estate, even farmland. You can invest in promissory notes where the solo 401k lends money to a real estate developer, for example, and then that promissory note is secured by real estate. You can invest in physical precious metals like gold coins and silver coins, provided that it's a certain type of metal. We've done webinars on the various metals in the past. If you visit our YouTube library, you can view that past webinar. You can, of course, invest in private placements. We've done webinars on that as well. You can also make those investments by writing a check or by wire, hence why oftentimes the solo 401k is referred to as a checkbook control retirement plan. Other reasons for a solo 401k comes from the contribution side of things, where you can make pre-tax contributions, Roth contributions, as well as voluntary after-tax solo 401k contributions. For example, we oftentimes get the question as to why should I open a solo 401k plan instead of a SEP IRA? And a SEP IRA is also a retirement account for the self-employed. Well, one of the main reasons why individuals prefer the solo 401k from a contribution perspective is that you can make both employee and employer contributions as well as voluntary after-tax solo 401k contributions to a solo 401k. A SEP IRA, on the other hand, only allows for employer contributions. Here's a good example of a comparison from a contribution perspective of a solo 401k versus a SEP IRA. So for tax year 2025, a solo 401k allows for employee contributions up to $23,500 for someone who's under age 50, whereas a SEP IRA does not allow for employee contributions. The solo 401k also allows for employer contributions, and you can contribute up to 25% of your self-employment income if you're referring to an S corporation. If it's a sole proprietorship or a partnership, it would be 20% of your net self-employment income after you subtract 1/2 of self-employment income tax. That's the employer contribution, which puts it on par with the SEP IRA. But the difference here is that the SEP IRA does not allow for employee contributions. You can also make a catch-up contribution to a solo 401k if you're age 50 or older in tax year 2025. The catch-up amount for tax year 2025 to a solo 401k is $7,500. A SEP IRA does not allow for catch-up contributions. Instead, you can make a catch-up contribution of $1,000 to a traditional IRA. There's also the super catch-up contribution effective for tax year 2025 and future years, resulting from Secure Act 2.0. It's available for those who are in certain age groups, specifically age 60 through 63. So instead of making a catch-up contribution of $7,500, you can make a super catch-up contribution of $11,250 to that solo 401k. Again, a SEP IRA does not allow for the super catch-up contribution either. No IRAs, for that matter, allow for the super catch-up contribution. Also, with the solo 401k, you can utilize the Mega Backdoor Roth Solo 401k strategy by making voluntary after-tax solo 401k contributions. That's not available in a SEP IRA. So as a result, from a contribution perspective, there's really no comparison between a solo 401k and a SEP IRA, meaning that the solo 401k outshines the SEP IRA. Okay, we've got a question here from Phil. If we invest in Bitcoin through a 401k, are those investments reported on 1040? No, they're not reported on Form 1040. Because remember, when you invest a solo 401k in any type of investment, it doesn't have to be, it can be whether it's equities, physical real estate, precious metals, or cryptocurrency, that investment is made through the solo 401k. And a solo 401k is a tax shelter vehicle, meaning that it's afforded favorable tax treatment under the regulations. Therefore, depending on whether you invest pre-tax solo 401k funds versus Roth solo 401k funds, all those gains will either grow tax deferred or tax free in the case of a Roth solo 401k. So you never report solo 401k investments on a Form 1040. So no, the Form 1040, as you probably realize, is a personal tax return, and that's where you report contributions, annual contributions that you make to the solo 401k. Typically, employee contributions are reported on that Form 1040, specifically using Schedule 1, which is an attachment to that Form 1040. And that's how you report pre-tax solo 401k contributions if they're employee pre-tax contributions. We did a webinar last Friday on how to report contributions that you make to a solo 401k on your personal and or business tax return. So again, if you visit our YouTube library, our YouTube channel, you can access over 900 videos that we've posted regarding retirement accounts. And we just posted one on Friday regarding how to report contributions. It's free to join. You'll receive notifications when we go live if you join our YouTube channel, so please join. Please also like today's video, as it helps to get the word out to other solopreneurs like yourself. And again, take a look at our My Community. We've got over 30,000 members there. They're posting forum posts and so forth. So take a look at that. Good question. Okay, let's see. Looks like we got a question here from Willie. For owner and spouse, is there a master seventh account, or does my S-Corp's bank account distribute all money to the sub-accounts? Good question. So keep in mind that your self-employed business has its own separate bank account, whether it's an S-Corp, sole proprietorship, or so forth. That's never part of the solo 401k. The solo 401k is a separate entity. It's technically a retirement trust. So the solo 401k will have its own separate employer identification number. So let's say that Willie is self-employed in an S corporation, he and his spouse. So if you look at the image on the right here, that's an example of a two-participant plan. So the S corporation sponsors the solo 401k plan. So the S corporation has its own separate bank account. Then the solo 401k obtains. So the solo 401k opens a solo 401k plan. As part of the establishment process here at my solo 401k financial, will obtain an employer identification number for that solo 401k. You cannot use your business EIN because, again, a solo 401k is a retirement trust. It's a separate legal entity requiring its own separate EIN number, and that EIN number is going to be used when opening up the solo 401k holding accounts, aka bank or brokerage accounts. So here, Willie and his spouse were both self-employed in the same S corporation, so they're each going to have 3 separate brokerage accounts or holding accounts under that solo 401k plan. to hold their respective funds. So just a total of 6 brokerage accounts, for example. The first one is a pre-tax brokerage account. The second one is a Roth brokerage account. And the third one is the voluntary after-tax brokerage account. 2 participants, that's why you see 6 separate brokerage accounts. It's not 7, it's 6, because these are specific to the plan. So good question. Let's keep going over today's webinar. Again, can a self-employed person have a solo 401k? Thanks for your questions. Go ahead and type over your questions and we'll get to those as we continue with today's topic. So we just went over the contributions, how a solo 401k hands down beats a SEP IRA from a contribution perspective. We talked about the contribution limits there. Let's see here. So again, a solo 401k is also advantageous because you can borrow from the solo 401k plan. You can borrow 50% of your solo 401k balance not to exceed $50,000, and you pay back your own solo 401k. Each participant can borrow from their respective solo 401k funds. So if both spouses are self-employed in the same business, therefore they participate in the same solo 401k plan, they can each borrow 50% of their respective solo 401k balance up to $50,000. And then they pay back their own solo 401k with principal and interest over a 5-year period or 15 or 30-year period if the funds are used towards the purchase of their primary residence. There's no credit check when you borrow from your own solo 401k plan. The interest rate's typically the prime rate plus 1%. You can also use a CD rate plus 2%. The interest and the principal go back to your own plan, so you're paying your own plan back. Monthly or quarterly payments, they're scheduled payments. So the first payment would be due the following month or the following quarter, depending on whether it's a monthly or quarterly payment. And you can use the funds for any purpose. If you use the funds for any purpose, those borrowed 401k participant loan funds for any purpose, that's a 5-year term. If you're going to use it towards the purchase of your primary residence, then it can be extended to a 15 or 30-year period. They're level payments consistent of principal and interest again. You can't exceed the limit, which is 50% of the total balance not to exceed $50,000. For example, if the value of your solo 401k is $100,000 or more, the maximum you can borrow is $50,000. On the other hand, if the value of your solo 401k is $80,000, for example, the maximum you can borrow is $40,000. And that's actually another big advantage of the solo 401k over the SEP IRA. SEP IRAs do not allow for solo 401k, for 401k, or for participant loans, I should say. So a SEP IRA, just like an IRA, does not allow the individual to borrow from their SEP IRA, but you can borrow from a solo 401k plan. Also, you've got the mega backdoor Roth solo 401k strategy that applies to the solo 401k plan. A SEP IRA does not allow for the mega backdoor Roth solo 401k strategy. The mega backdoor Roth solo 401k strategy is whereby you're indirectly trying to maximize your Roth solo 401k funds. In other words, you're trying to get more money into your Roth solo 401k over and above the regular limit, which is typically $23,500 as an employee contribution for tax year 2025. So if you want to make an employee Roth solo 401k contribution, the maximum is $23,500. And that contribution would be made into the Roth solo 401k bucket, aka holding account, also known as the bank or brokerage account. You can also make employer Roth solo 401k contributions resulting from Secure Act 2.0. Those would be made to the Roth solo 401k bucket as well. But the voluntary after-tax bucket is part of the mega backdoor Roth solo 401k strategy, where you make the voluntary after-tax contribution to this voluntary after-tax solo 401k bucket, and then you immediately convert it to the Roth solo 401k so that there are little gains. That way, only the small gains would be taxable when they get converted to the Roth solo 401k. For example, for tax year 2025, the overall contribution limit as part of the Mega Backdoor Roth Solo 401k strategy is $70,000. So let's say Jane is self-employed in her own S corporation. She reports a total of 70,000 of W-2 wages from her self-employed S corporation for tax year 2025. Jane can put the entire $70,000 into the voluntary after-tax solo 401k bucket and turn around and convert it to the Roth solo 401k, because the voluntary after-tax solo 401k contribution is a dollar for dollar calculation. So when you're self-employed under an S corporation, contributions are based on your W-2 wages. So you just need to pay yourself a total of 70,000 of gross box one W-2 wages, and you can contribute that entire 70,000 to the voluntary after-tax solo 401k bucket and convert it to the Roth solo 401k. So that's another advantage of being self-employed. And we're finding out that a self-employed person can have a solo 401k plan as long as he or she is self-employed in that business, and that business does not employ any non-owner full-time W-2 employees. And we've also been talking about the advantages of the solo 401k. So a solo 401k is oftentimes used to consolidate other retirement accounts as well. Let's say you have a former employer 401k, or let's say you used to be in the educational field or the Medicare field, and you have a 403b, that can be transferred to a solo 401k plan. Let's say you used to work for the government and you have a thrift savings plan. That thrift savings plan can also be transferred to the solo 401k. You can also transfer a former employer 401k, defined benefit plan, also known as a cash balance plan. You can also transfer a 457b plan. You can transfer traditional IRAs, SEP IRAs, simple IRAs. Those can all be transferred to a solo 401k. So the solo 401k is often used as a way to consolidate all your retirement accounts under one umbrella. You can also process conversions under that solo 401k. So let's say you have pre-tax solo 401k funds. Those can be converted to the Roth solo 401k. It's going to be a taxable event, but you can convert those over, and now they'll land in the Roth solo 401k bucket and grow tax-free. It also allows for the Mega Backdoor Roth solo 401k, where you make a voluntary after-tax solo 401k contribution and you process an in-plan conversion to the Roth solo 401k. So yes, you can transfer a 403b to a solo 401k plan. That's right. Whether it's a Roth 403b or a pre-tax 403b, those can be transferred to the solo 401k. If you are a client of my solo 401k financial, we'll assist you in transferring those funds by filling out the appropriate transfer form for you. Now, another big one about the solo 401k is the $1,500 auto contribution credit. That's not available to SEP IRAs, so that's another big advantage. With the $1,500 auto contribution credit, it's really a way of the government subsidizing a self-employed individual's retirement account. It's a way to get them to save for retirement by providing a $1,500 auto contribution credit, which is a dollar for dollar credit. And you actually, if you're a client of my solo 401k financial, this credit was not available till the beginning of year 2024. So this also applies to existing plans. This can be added to your existing solo 401k plan. So if you're a client from prior to January 1st of 2024, you would submit a support ticket on our website and we can add the auto contribution credit to your solo 401k plan. So we would have to amend the plan to add that credit. You would have to sign a few documents. So it's available to both new clients and existing clients. If you signed up with my solo 401k financial January 1st of 2024 and after, your plans are automatically drafted with the auto contribution credit. And once that auto contribution credit is added to your plan, you're now required to contribute to the plan. So it's a little confusing because it's called the auto contribution credit. You can actually opt out. There's a form we would provide to you so that you can opt out of making contributions, but that doesn't mean that you still cannot make contributions. You'll be able to make contributions at whatever amount you want up to the overall limit. So again, even though it's called the auto contribution credit, you are now required to contribute in order to take advantage of this $1,500 credit, which is it's $500 per year over three years. So, for example, if you're an existing client, and again, you signed up with this prior to January 1st of 2024, your plan would need to be amended. You would submit a support ticket and we can amend your plan to add that. So now you would qualify to start using auto contribution credit here in 2025 for $500. You can do a second amount of $500 for 2026 and a final $500 amount in 2027 for a total of $1,500. Not all solo 401k providers offer a plan that has the auto contribution credit. We were the first ones to actually offer it, and we've noticed more and more are offering it now, especially some of our competitors. But traditional solo 401k providers like the Fidelities of the world, Schwab's, and so forth do not offer that type of plan. But if you have a plan with those institutions, we can restate that plan to our plan and add the auto contribution credit to that plan. And again, it's a dollar for dollar credit. You're going to file Form 8881 each year to claim that $500 credit. For our clients, we'll provide a video and a PowerPoint to guide you on how to fill out that form. It's a 2-page form, only one section needs to be filled out. You attach it to your business tax return each year to claim that $500 credit over a 3-year period for a total of $1,500. So that's another big advantage of the solo 401k plan over the SEP IRA. We're coming to the end of our daily webinar here. So if you have any other questions, go ahead and type those over. But no worries, we'll be live again here in a couple hours. We typically go live at least once a day, many times twice a day. So again, please like today's video as it really helps us to get the word out to other solopreneurs. Please also subscribe to our YouTube channel so that you receive notifications when we go live. Now, here at my Solo 401k Financial, we obviously offer a self-employed solo 401k plan. For clients of my Solo 401k Financial, we'll handle reporting for that plan. For example, Form 1099-R reporting when you process a distribution, whether it's required minimum distributions or other types of distributions. If you process a conversion, where there's the mega backdoor Roth solo 401k conversion or the pre-tax solo 401k conversion, those all necessitate the issuance of a Form 1099-R. We'll issue that and file it with the government. We'll also prepare Form 5500 Easy. Now, these returns, we'll prepare those for you, but keep in mind, we don't have access to your funds. So it's your responsibility to let us know when you need assistance with this reporting if you want us to help. Either you're not required to have us help you with this reporting, but it's a service that we provide at no additional fee, provided that you timely request these tax returns. So many of our clients will have their CPA handle it, but a lot of them have us handle it. So as long as you timely request it, we'll help you file the Form 1099-R and the 5500 Easy. The 5500 Easy applies in 2 instances. One, when the market value of your solo 401k plan is greater than $250,000 as of year end, you have to file Form 5500 Easy. For example, if your plan year end is December 31st and the balance of your solo 401k plan is greater than $250,000, a Form 5500 Easy would need to be filed by July 31st of next year if the market value of the plan, and you have to add up all the funds in your plan, so all these buckets, because all these buckets make up that same solo 401k plan. So when you add all these buckets together, and if the market value of that solo 401k plan is greater than $250,000 as of the end of the plan year end, you need to let us know so that we can prepare that 5500 Easy for you, and we can actually file it for you electronically with the government. But you need to let us know. The other instance where that Form 5500 Easy requires to be filed with the government is when you close the plan at plan termination. So just like everything else, there's always a beginning and an end. Same thing with the solo 401k. There's going to come a time where you will no longer be self-employed. Therefore, you're going to have to close your solo 401k plan. When you close a solo 401k plan, it's not a matter of just turning the switch off. you actually have to file documents with the IRS. Just like when you open a solo 401k plan, specific IRS required plan documents apply. Same thing when you close a solo 401k plan. You have to issue both a final Form 1099-R and a final 5500 Easy. And that 5500 Easy applies regardless of the market value of your plan. So even if the market value of your solo 401k plan is under 250,000 in value when you close the plan, you still have to file a final Form 5500 Easy. Okay, great. So thank you for joining today's daily webinar. It looks like we have one more question. Let's answer that question and we'll be done. Again, please like today's video to help get the word out to other solopreneurs like yourself. Should rollovers from existing 401k to my solo 401k be like, or should my current 401k be liquidated before rollover? Well, if it's a solo 401k that you are restating, then you can keep those equities typically. You don't have to liquidate them. If you have a former employer plan that you're looking to transfer that holds certain types of investments, then it's typically best to first open up an IRA and then transfer those securities in kind, so those stocks or mutual funds, to that IRA from that former employer plan. And let's say you decide to use Fidelity Investments to hold the solo 401k funds for the solo 401k offered by my solo 401k Financial. You would open that IRA at Fidelity, have that former employer investments transferred in kind to that IRA. And then once at Fidelity, we can help you move that IRA internally, including those investments like stocks and mutual funds, without having to liquidate them. They can be transferred in kind to the solo 401k offered by my solo 401k Financial. And our clients can use Fidelity Investments for the brokerage accounts for the solo 401k that we offer. So yes, Fidelity has their own solo 401k, but they also provide what they refer to as non-prototype brokerage accounts for a solo 401k offered by my solo 401k Financial. So great question. Again, thank you for joining today's daily webinar. We'll be back again here in a couple hours. Until then, have a great rest of the day.